Welcome to the AI Investor Podcast from 24/7 Wall Street. On today's episode, we're sharing the details of an exciting new feature of this podcast, the launch of a portfolio of $500,000 of real money that we're going to be managing and discussing in full view of our listeners, allowing you to follow along with the exact high conviction trades that we're making in the AI space. All of that and a whole lot more is next. Welcome back, everyone. I am David Hanson, and I am joined by my co-host and 24/7 Wall Street colleague, Eric Bleeker. Eric, NVIDIA is about flat since we last spoke on the last episode. So I assume there's just no news in the AI space, everything just normal?
No news whatsoever. I anticipate we'll be talking for about an hour today. I think we could have spent several hours on the kinds of news there is because it's been a busy 2 weeks.
Exactly. So, Eric, I don't want to bury the lead. I teased it in the open. We've got a really cool, really unique feature that we've decided to introduce to this show to make it even more actionable for our listeners and investors out there. We talked a lot about on our first episode that we don't want this just to be, another podcast that's telling you about the news. We want this to be actionable. We want to give you investment ideas that you can use in your own life. So you're taking $500,000 of your own money and launching a public-facing portfolio where our listeners can follow with the trades, the position sizing. So let's just walk our listeners through the details of that, including some of the initial positions that we're going to be adding to the portfolio.
Yeah, like you said, we're trying to make this a podcast that is not just, it's about following AI and the developments in the space, but it's about how you can practically make money and, watch a trend that has the potential to generate so much wealth in the next decade and beyond, and actually change your life for the better as well. So I thought about what's the most actionable way to do that. It's not just talking about companies every single week. It's putting conviction behind where we're investing money, showing which stocks, I can talk about, I like this stock on a scale of 1 to 10 and 8 or whatever. But at the end of the day, how you allocate money to it is, how finance is done, right? So if there's a way that we want to show people exactly how we're investing, exactly what stocks we believe in, I just thought that, the best way to do that is to build an actual portfolio. It's worth noting, $500,000. This is my personal money. This is my family's money. If it doesn't do well, it's painful for me, but that's what you want, right? You want people who have actual skin in the game, because when people don't have skin and you're able to just throw out prognostication on a stock that could double or something, right? That's meaningless to those people. It only matters if they're actually investing. And it says a lot when you watch how people are investing, because again, that's the true basis of conviction across any other stock. So David, you can tee them up, but we're going to start with some allocations today. And the idea is every single week we'll be reviewing stocks that we own and also continuing to add to the portfolio. This isn't something that's complete on day one. It's an evolving portfolio that will reflect, how we're seeing the market.
Yeah, so let's just talk about the first one. And I can hear the eyes rolling or the of course from our listeners, but NVIDIA is going to be a position in the portfolio. So we talked about NVIDIA a lot last week. This portfolio is going to have a lot of companies that are not NVIDIA. But just talk, why is NVIDIA, despite its enormously successful run as a stock over the last couple of years, why is it still getting a spot in our portfolio? Obviously, everyone knows about it, but that must mean that you still believe at this gigantic market cap, there's still upside for it.
Yeah, you mentioned the gigantic market cap. It's 2.9 trillion. That makes it one of the largest companies in the world. I think as of right now, it's the third largest company in the world. There's so much talk about NVIDIA. If you turn on CNBC, you can set a timer. It's not going to last very long before someone mentions NVIDIA. And it's always this hyperbolic discussion. Often it's the next biggest bubble ever, or, it's the next company that's going to hit, $10 trillion or whatever. So I wanted to simplify this for everyone watching. The number that you need to base NVIDIA discussion off, I believe, is the next year's earnings in 2025. I believe they're due to earn something like $4.50 in earnings. So you can take, per share. So you can take where it's trading at and you can divide by that number to get, the multiple that's looking at. So as we record this, it's at about $120 per share, puts it a little north of 25 times earnings. What we were looking at recently was a lot of tech companies that large tech companies, they were all trading in a band of around 30 to 35 times forward earnings. Historically, that's a little high, but these companies also historically have performed extremely well. So you need to account for that as well. We saw these valuations come down across the board, with probably the strongest being NVIDIA. I said on our show last week, David, I said, I hope NVIDIA falls 10% after earnings because I'll load up into it. Unfortunately, I added some in my personal portfolio. I won't be able to add to the portfolio I'm building for this show at the lowest levels it hit, which was just over $100 per share. But you can see if it's down by $100 per share, you're looking at closer to, 20, a low 21, 22 times earnings, which brings it back very close to market multiples. So what am I excited about NVIDIA? I'm excited about where we are in this cycle right now, which we're going to discuss today, because we're going to talk about, three trends that could really define 2025. The expectation has been that NVIDIA is going to be driving towards peak earnings in this next year, and that after that, there's going to be a lot of concerns about falling spend. Well, I'm looking at a lot of the trends and excitement in the space, and I think this peak earnings discussion is going to actually shift. So we're going to go through a Blackwell cycle with really strong growth rates. That's going to allow NVIDIA to perform pretty well across the next year. Now, we're going to be pretty strategic on how we invest in NVIDIA. This isn't just buy it once, set and forget. We're probably going to change our allocation around, depending on what we're seeing. But I'm starting by investing $25,000 in NVIDIA as kind of a core holding. That's 5% of total portfolio. And that leaves some space where we could take that up, especially if it comes back down to $100, or we can stand pat. And in addition, I think we're going to continue to watch for each of these stocks. I'll talk about a few more we may be adding. I think we're going to be looking at some other peers to NVIDIA, Broadcom, Marvell, AMD, all potential additions to the portfolio as well.
Now, we don't ever want to say, this is the floor, but you mentioned kind of the $100 price point. And when we talk about earnings over the next year, you said on the last show, it's pretty much in the bag that Blackwell is going to be a big success. There's enormous demand for it. It's still supply constrained, even though they said we're going to get supply online. But it seems like the earnings story is pretty much, not set in stone, but we kind of know what earnings are going to be over the next, 12, 18 months view there. So looking at that multiple there, do you kind of see that 20 times earnings, $100 price point? Do you see that as the floor? Obviously, we never know what's going to happen in the market.
Yes.
But is that kind of the point where you start to say, okay, it's at 100. If it drops to 80, it becomes a screaming buy? Is that kind of the price that you really think you're watching in terms of going more into this name?
Yeah, right now I'm kind of watching a band, floor around 20x and upper bound around 35x, and kind of basing conviction in how we want to size it upon there. And like I said, right now it's a little bit closer to the lower bound at, about 25, 26 times earnings, depending on where it is. So yeah, I believe it would be hard to see it falling more dramatically than that. The situation which would likely cause it would be if there was rumblings that some of its biggest customers, these hyperscalers like a Microsoft, were exploring taking their capital expenditures down. That's a point where you could probably see it breaking below the lower bounds that we've set, because it would bring into kind of the narrative the idea that they are hitting peak earnings, which is the fear right now.
Right. Okay. We're going to talk about NVIDIA, I'm sure, on future shows. We talked about it last show. It's going to probably be in every show. So let's move on. Let's go through the other names that you want to be adding to the portfolio as we launch it here.
Yeah, so let's do stock number 2, which is Synopsys. This is another stock that we talked about last week. Its ticker is SNPS. It's worth about $70 billion, which, for perspective, that's going to be somewhere around the 250th largest stock. So not tiny, but also not a household name. Just to reiterate what we talked about last week, again, you can go and download that podcast, listen to it. But I love the competitive positioning of this company. It has a Coke and Pepsi situation with its closest competitor, which is Cadence. I love its growth opportunities. I believe AI is extremely additive to its revenue rather than a threat. And I love its end market. There's a lot more companies getting into chip design. 15 years ago, 100% of its revenue was to semiconductor companies. Today, that figure is less than half. And it's because 8 of the 10 largest companies in the world are now designing their own chips, and it is expanding the customer base that Synopsys works with. We said the only thing I don't love about this company is just its valuation is priced. That's a great company, which it is. It's fallen a little bit since then. So we're going to take this opportunity to do a $10,000 investment, which is roughly 2% of the portfolio. This leaves opportunities for me to continue investing in it. If I see more opportunities as it falls, I can also diversify by buying that, Pepsi and Coke situation with Cadence, which is the other big name in the space. Overall, I think we're going to look for software plays, which this is a software play. That could be, a company like Palantir or names in the business intelligence space. It could be cybersecurity. We're going to look at the hyperscalers as well, companies like Meta that have dominant model positions. So I think if you're looking at this portfolio and saying, is it going to be all semiconductors? No, we're looking across a lot of different areas. Software investments is going to be a space we're going to try allocating towards.
And one thing we should say about, investing $500,000 in this portfolio, I'm going to assume that most of our listeners understand you don't necessarily need to have $500,000. If you are setting aside some money that you want to invest in this trend, it doesn't have to be these exact dollar amounts, of course. But just to give listeners a sense of, you said 20,000 on NVIDIA, this one's a smaller position at 10. Is that kind of a ratio that you feel okay about these companies in terms of someone, we're not trying to give exact advice here on Zenning's portfolio, but is that something people can take away as kind of, okay, 20,000 versus 10 on Synopsys? Is that a fair kind of ratio that someone can think about?
Yeah, NVIDIA was 25,000. So
25, yeah.
5%. Yeah, I think just being able to think about sizing that way. Let's say you've got $10,000 in cash today. Maybe you might think about, you don't need to do the exact ratios, but I'm going to start with a couple thousand NVIDIA, maybe 1,000 in Synopsys, roughly following, and you're able to start building out, this portfolio of companies that our goal is to give you exposure to the best companies and also the best trends. So if you're able to buy some smaller pieces in approximate sizing, you're going to be able to recreate what we're doing, even if you're not investing $500,000 or following this exactly.
Right. Okay. So we talked about NVIDIA and it's nearly $3 trillion market cap. We just gave us 70 billion. Let's move on to our next one, which is more in the middle of those two numbers. And that's Taiwan Semi. Again, a company that people have heard about, but talk about why you think it belongs in this initial portfolio buy.
Yeah. I mean, it's worth 750 billion. It's a larger company. It's only trading for about 17 times next year's earnings, which, that's kind of an interesting situation because this is a company with a near monopoly in manufacturing cutting edge chips. It's going to grow profits by more than 30%, and it's trading for market rates. Well, why is that? Well, the unfortunate side to Taiwan Semiconductor might trade for double its valuation if it wasn't located in Taiwan and it didn't have the geopolitical cycle. So that's always going to be something that hangs over it. But I love the catalyst for this company across the next year. There's a super cycle happening where Apple's going to see a much higher upgrade rates on its phones. Right now, their upgrade rates are at its lowest point ever. There's a really large install base that needs to upgrade, and AI features give a reason to do that. Its competition is fading. Intel, there's probably going to be a government bailout for Intel, would be my guess, but it's going to take years to turn that chip around. Samsung is really struggling right now. They're falling behind Taiwan Semiconductor. The company is effectively pushing pricing changes onto its customers. The customers have said, hey, we realize your value. We're going to have to pay. Like, that's a good situation to have. And they're increasingly driving the services that are valuable to customers and things like packaging chips that, again, it adds to the value add and their ability to raise pricing. So I just really like the position that they're in. I'm going to initially invest 15,000, which is between Synopsys and NVIDIA. And I think too, where we'll look, I'm not starting with any of the semiconductor like equipment plays that would actually be kind of the suppliers to Taiwan Semiconductor. Companies like ASML, Tokyo Electron, BA Semi, KLA Tencor, the companies we discussed last week. I'm probably going to add those in a future edition. With those kind of companies, I'm just very closely paying attention to valuation. And that's especially if we get, let's say, if recession fears really pop up across the next week or two and we get a 10% discount on those, that's where we can be strategic, and I can issue trade alerts and immediately take advantage of pricing situations. And David, after we've got one more stock, but we'll talk about how to follow kind of this portfolio in real time as well.
Sure. And just, one more thing on Taiwan Semi. You mentioned I think it's been covered as so much in the media over the last couple of years, the kind of the obvious risk of just where it's located in the world. Is the valuation, is that enough to make people feel okay about this? Because obviously the fear on the extreme side is just, hey, something happens in Taiwan and is this company, severely impaired from being able to do business? So you feel okay enough about it's trading at a cheap enough valuation that it's kind of, the market is taking into account those risks. And right now we're just we're investing on the business upside of it.
Yeah, I think so. I am not blasé at all about the risk that China presents to Taiwan. I know this is a geopolitics show, but
you're not an expert in geopolitics.
We're probably going to have to do some shows discussing it because chips at this point are geopolitics.
Sure.
You can't extricate the two. So I feel like one of the advantages of this setup where it's a dynamic portfolio that we can reinvest at any given time. If I am finding the situation around geopolitics to be too risky, we can reallocate. But we're going to have to consider this to some degree. That as situations change, what's going on in the world might define how we're positioning the portfolio, which is pretty unique. You've never had to think much about this if you're investing in, companies like Microsoft or Amazon, but it is just a feature of the next decade. And at 17 times earnings, I feel pretty good about the risk reward that we're getting for Taiwan Semi.
Yeah, I think if you can wade through some of the muck in the presidential debate from earlier this week, I think Taiwan Semi maybe wasn't mentioned by name, but chips did come up. So to your
it was
point,
definitely mentioned.
Yes.
Center.
Yeah. So let's move on to our final buy that we're going to be sharing in this initial kind of introduction to the portfolio. And it's another company that we talked about last week, and that's Coherent. This is the smallest company that we're going to be adding. So again, listeners who did not listen last week, go back. You can get a deeper dive on Coherent, but let's just talk a little bit more about why now? Why are we adding it to the portfolio?
Yeah, as you mentioned, it's the smallest of the group at 11.5 billion. That is sub S&P 500 level. I know it's kind of wild to say a $11.5 billion company is small. It is in today's market. It's a diversified company. About half of its revenues are going towards communications, which I see as a big play within the future of data centers. So the idea is that interconnects that are connecting all of these GPUs together across these massive clusters are going to see a massive wave of growth. We're going to talk about that in our trends for next year. My belief is when investors go looking for investing ideas, they're going to wind up on Coherent as a top play. Now, it's not the only company in this space. You can look at Credo, Lumentum, Marvell, Broadcom. All have connections to kind of this networking opportunity. It's a very long list. I think we're going to over allocate towards this idea. I think by the end, we could have 25% of the capital for the portfolio just going for this one opportunity. But I'm kind of introducing Coherent today because I think it's a pretty stable company. I love the leadership in the company. I think the CEO has a great strategy that could lead to impressive returns across the next 5 years. So I'm going to do $10,000 or about 2% of the portfolio. That's the same number I did for Synopsys. But again, I think this number is going to go up, and it may go up with further investments to Coherent. It's certainly going to go up with other companies in the space, but it gives investors exposure to a trend that I would just estimate, most people watching this actually don't have exposure to this. And it's not going to be something that you watch CNBC and they're like, let's talk about interconnects in the data center today, right? You're going to get exposure for this listening to a podcast like this, and you're not going to just get exposure to it. You're going to get a complete strategy.
Great. So you alluded to it. We're talking about these buys here. This is obviously a place you can go maybe to first hear in detail the trades that we're making, the position sizing. But let's talk a little bit. Where else can people go? Because if someone's listening to this, and I hope no one's driving to work and they're trying to write down these names and these ticker symbols, might be a little confusing. So let's talk about the other ways that we're going to be sharing the details of this portfolio.
Yeah, so we're going to have a few different paths that you can follow because, again, we will announce every trade before we make every trade. Now, this show, it's brand new. No one's moving the market with these trades, but I also do want to give people confidence that no, there's no front running. We will only trade after we notify the listeners themselves. So for every single trade, I will make an announcement. I'll do it from my personal X or Twitter account, which is Bleeker Tech. If you search my name, Eric Bleeker, in Google, it should come up near the top result. If you follow me, I'll announce it there. If you follow 24/7 Wall Street's account, we will also announce it there. And we will have a page on 247wallstreet.com where we will be tracking these alerts. I will announce them. I will put a buy thesis, and we will put a trade confirmation after we've concluded the trade. From that page on 24/7, we'll also have a document where we're tracking the buying prices and performance of these stocks over time. So again, there's ways to track in real time, and also in every next podcast, we will review trades that we've made, and also, just talk about any events following these stocks. So if you want to get trade alerts in real time, follow 24/7. You can follow my account. And if you want to just be continually appraised of the portfolio, we're going to continually track it on the podcast itself.
Great. And again, we do have the email address that we set up last week, questions@247wallstreet.com. If there's questions about the portfolio or anything like that, shoot questions our way. We're going to be happy to answer them. And again, if you have friends or colleagues that are looking for stock ideas, maybe you're the friend that people are always badgering. Hey, do you have any good stock ideas? What are you buying these days? So if you don't want to have to answer that, share this podcast, share the links that Eric talked about, and we'd love for them to hop on board and follow the journey. So again, exciting portfolio that we're going to be doing here. I want to move on, Eric, to some news in the AI space. A couple of big companies, a couple of big quotes that are grabbing some attention. Obviously, was being sarcastic at the top that nothing has happened in the world of AI over the past 2 weeks. We had Oracle report earnings. Stock was up, I think, 12% on earnings. Again, this is like a multi-hundred billions of dollar company that's moving 12%. So we're just continuing to see these massive moves in huge tech companies because there's so much kind of unknown happening, huge earnings beats, revenue growth. But I want to talk a little bit about some pretty wild quotes that we heard from Larry Ellison, who, of course, is the founder of Oracle. He was on the conference call. So one of the quotes that jumped out to me was he was talking about, building these frontier models and what it takes to build them. And the number he threw out was you're basically going to need about $100 billion to build one of these models, when that's just a lot of, you can buy a lot of sports franchises for $100 billion. And that's just to build frontier models. So there's just enormous dollars being thrown away. I want to not thrown away, thrown out. I wanted to ask you what else stood out from Ellison's comments, and kind of just what your takeaway that you got from him, who's obviously, he's been in the tech world for so long. He's a respected voice in this space.
Yeah, it's interesting that you have this prior generation of tech companies that dominated things like .com. You could talk about ones that fell behind, like Cisco in many ways, or Yahoo, which is a fraction of its former self, and even Intel kind of fading away. And then you have other companies that have managed to reinvent themselves. We were kind of laughing because we were preparing for the show, and you were like, Oracle, have they really done well? I mean, only up 200% the past 5 years.
A laggard. Yeah.
Which shows generally how well technology is done. But yeah, Oracle is kind of getting a little bit more into the Microsoft camp of reinventing itself around cloud computing and AI technologies. And they were up 12% after these earnings. So what struck me from these quotes, Larry Ellison, he was just jumping out of his skin. He was so excited talking about things. You look at that quote talking about $100 billion to be able to build frontier models. that was extremely interesting. Also, he followed up with the fact that they're in the permitting process for nuclear reactors to be able to power some of these new data centers that they come out with. But what's interesting is right after they did the earnings and he had that we're actually permitting nuclear reactors quote, they then came out with a press release about what might be the most powerful data center in the world. It is, I've got the numbers right here. I'm looking at it's a system with 131,000 Blackwell GPUs. I ran the numbers on this. I believe that this one cluster of chips could potentially bring in $5.5 billion in revenue to NVIDIA itself. So it shows the scale of the ambition that's happening. One more thing, David, that I thought was really interesting from this. Larry Ellison, he got the quote or he got the question that you often see from analysts about how much longer is the spending going to go? Because, we're not seeing all the breakthrough products in AI that you'd expect. And he gave a really interesting answer that he basically said, look, I'm on the board of several healthcare companies. I'm working in this space with several startups. Pretty soon, everything, x-rays, being able to do ultrasounds, that's all going to be tied into AI. So I'll read it. When are we going to start monetizing it? Well, all of Cerner is the monetization. The fact that we can dramatically expand our health business is because it's based on AI. AI is just, I don't know how to describe it. I mean, the best way to describe it, it's not something you sell separately. It is the diagnostic system. It is the electronic health record system. It is the pharmacy system, the prescription system, the user authentication, the login system. Everything is AI. And I know people think it's a separate thing. Oh my God, I hear a bunch of applications come and say, oh, now we've got AI agents, we'll charge separately. I mean, it's our applications are going to be primarily AI applications. Everything. How'd you charge separately? So, David, we're going to talk later about agents as one of the big trends for next year. But I think he really captured that in so many of these industries, software and what it fundamentally is going to transform into AI. And that's what he is seeing at the forefront. So again, you have these tech leaders who are positioning these companies well, and you're wondering what they're seeing. I thought that was a great quote that encapsulated, what a Larry Ellison is seeing, that he is basing the entire future of his company on AI at this point.
Yeah, I mean, you talk about Larry Ellison. He's not exactly a spring chicken anymore. I think he's 80 years old. And he's talking about, I think part of his quote was, this is going to be a battle for tech supremacy over the next 5 to 10 years. And he's jumping out of his seat. So he's going to be 90 years old in 10 years. And he's excited about this. You should just start going down the list of these well-known people who are excited and just almost just can't contain themselves about what are the possibilities here. You have Nadella at Microsoft. Google has come out and said the same thing. Elon Musk, I think I saw that what Sergey Brin was saying, he's back in Google every single day now working on AI because he can't believe how fast it's moving. So we talked last week about, could AI turn into the next .com bubble, and the hype just gets so big and there's not a payoff there. It's always on the table, but you do start to look at the list of people who have kind of staked their reputation on this working out and having a return and being something that really does deliver value. And it starts to become pretty, hard to disagree with what these people are saying. And maybe if they're wrong, there's gonna be a lot of reputations that are, tarnished a little bit, but the list just keeps growing of people who are seeing this firsthand and working on the front lines, and the enthusiasm doesn't seem to be slowing down.
Yeah, I agree with that. And I think when we're looking at other news, some of the recent rebound in the price of AI stocks is really reflective of what you were just talking about, that the past 2 weeks has really seen a cavalcade of some of the biggest experts coming out and kind of issuing bullishness that we haven't seen recently. There's a fundamental shift in the air right now.
Yeah, and we mentioned last week, you talked about Blackwell. What were the numbers you threw out? 6 times more powerful than we haven't even had.
Yeah. Yep.
So we haven't even had those, the next generation is not even fully rolled out. So again, we don't want the hype to get too ahead of ourselves. I wanted to hit on one more, a couple more news pieces. We saw the announcement that Palantir, kind of the mysterious software company that everyone's like, what exactly do they do? You've been on record saying this is an AI play for about a year now. I think you said, hey, this could be the next NVIDIA type stock here. It was announced that it's joining the S&P 500, which of course, to be included in that, you have to have a history of profitability. You have to be a certain size. So a pretty big moment for Palantir. And I think the stock was up some 15% on the inclusion news. So any thoughts on the Palantir news there?
Yeah, Palantir, it's definitely high risk, high reward. I own the stock. I also own options on it because I've thought that's a better way to capture the upside and potential in this company. It's now worth 78 billion. It's going to do less than 3 billion sales this year. So for perspective, its price to sales ratio is about the same as Nvidia's PE ratio currently. Bank of America, they just raised a price target to $50. I think that's kind of chasing the share price. But like you said, this is a stock that we've been covering for a long time. We actually predicted its inclusion into the S&P 500 back in July. I think we wrote about, if you Google discover the next NVIDIA, you can get our full 38-page AI report that we've issued on 24/7 Wall Street. You can get the whole thesis there. But I really, I like this company's potential to really be the go-to place that companies start with AI. They had a major announcement this week with BP that they're going to be, a really tight partnership with that company. And, again, it's just, I'm trying to think how much we would think about investing in Palantir in the portfolio. And, we're going to be strategic around pricing. It's going to have to be in the portfolio eventually because the upside's there. It is just right now, it is also at a very premium multiple. So it's a stock that I'm always watching. And, when we look at stocks that are going to be included in the S&P 500, it's worth mentioning that has become a major near-term catalyst. I think Super Micro jumped like 18% when it was included. It's also lost all that and then some at the current time. But if anyone out there is, looking at stocks that could be included and, that is a potential catalyst, I think one stock that is at the top of the list to be an inclusion the next time they rebalance would be Workday. I was surprised that they didn't make it in this round. So that is becoming a facet of today's investing world, that there is so much passive money that when stocks get in these major indexes, it is becoming a catalyst for investments.
Right. Did I miss any other news that jumped out to you from the last couple of weeks? I mean, I'm sure there's endless things. Again, you said we could probably talk for over an hour here, but anything else that you think is worth just highlighting from the past couple of weeks on the news side of things?
Yeah, I think it was interesting because coming into a couple days ago, we're filming this on Thursday, September 12th. Into Wednesday, a lot of these stocks were down dramatically. There is a major AI conference happening at Goldman Sachs right now. And from the moment NVIDIA started speaking to this moment that we're talking about, which is only about 24 hours later, it's up 10%, which for perspective is 3.5 times the size of Intel. When you look at, right? That's crazy, right?
Stop picking on Intel. I think there's been a lot of, I know it's been a dog, but you're really picking on Intel today.
I think they deserve to be picked on a bit, but we look at what's going on, and you really highlight this earlier. You have quotes in recent days from Sergey Brin saying, he is back in the office. Elon Musk saying this is the most powerful technology. Another really interesting event at that AI conference was Microsoft CTO came on stage, and they were asking him, is AI stagnating? And he basically said, if I was talking to you in private, I could convince you it's not. But we're seeing things behind the scenes I just can't talk about right now. But if you saw them, you would know that's not the case. So again, there is this almost wedge that's growing right now, where in the media, you're seeing more and more talk about AI being a bubble and what's going on. And the people who are at the forefront are getting ready for some really big developments happening. And you know why you can really tell this is the case? OpenAI is talking publicly about raising a valuation of 150 billion, which is close to a double from where they've raised before. If they're talking about that, means because the people who are investing have seen that something big is happening. And I think this is all really setting up 2025 to be a re-acceleration around excitement in the AI space. But again, we're going to talk about trends, so we can talk about a little bit more details on that in a minute.
Yeah, let's actually jump into the trends that we're looking at. The biggest trends going into, hard to say that 2024 is nearing the end. We've only got a couple more months. So as we go into this next year, you said the reacceleration, maybe it's plateaued a little bit in terms of excitement. I think many would say that 2024 has been the year of AI. You're saying next year could be even bigger. So let's talk through some of these trends. Which ones are kind of new? Which ones are continuations or just something that's already in the marketplace now getting bigger? So where do you want to start on the trend side of things?
Let's start with the launch of Blackwell, because I think this is kind of the fundamental jumping off point for a lot of the advancements in AI. I think AI has a little bit of a, you would almost call it like a TikTok model, where the amount of compute, the kind of processing performance makes a jump, which then allows a jump in the software, the AI models, which feeds the next compute cycle. Mm-hmm. So we're at a point right now where we're actually kind of hitting a wall on the compute side, where the biggest data clusters, they can only get to about 100,000 GPUs. And the reason for that, which again, this will kind of dovetail with other concepts we're going to talk about, is that it's not just the processors, it's about the entire stack of technology in a data center, about how you network them all together, the switches, the optics. And if everything's not getting better, you're not going to be able to make these data centers meaningfully more powerful. Blackwell is meaningfully more powerful. You talked about, you can benchmark things all kinds of ways. We talked about 6x last week. I was looking at the first real benchmarks I've seen came out for it on August 28th. And if you're just looking at a tokens per second running, this is Meta's model, the B200 was at 11,264. The prior most advanced chip, the H100, was at 3,065. So that's a performance jump of about 3.7 fold for pricing that is not 3.7 fold. It might be more like 50%. So again, this is going to give a massive performance jump, and it's also going to make all of the other technologies that are necessary for making these huge GPU clusters, it's going to move them all forward meaningfully, which is another trend we're going to talk about in a moment. But again, this is going to unleash that next generation of models. So when something comes out, last week we talked about the ChatGPT moment and GPT-4 being this massive leap forward in how, you are able to almost see AI reason. The next generation of models are going to be another kind of leap forward that begins a new hype cycle, and Blackwell coming out is going to facilitate this kind of up leveling in capabilities, so that impacts NVIDIA. And that's what almost all media is going to focus on, but it actually has cascading effects across the entire AI space.
So you talk about the GPT moment where we kind of see AI logic and, put things together. Not to put you on the spot, and it might be that we don't know all the capabilities of Blackwell. What are the kind of big unknowns or things that Blackwell might be able to unlock that we haven't been able to achieve from just a functionality perspective? Is it kind of the ability to have better memory of what's going on, or is it just we don't know yet, and we won't know until we start building the models with the new chips?
Well, let's use that as an opportunity to go to a second kind of prediction for the biggest jumps. I think we have to talk about AI agents. And so far, AI agents has been pretty, almost theoretical. Basically, an AI agent is an AI model and algorithm that can autonomously make decisions. You're seeing a lot in things like coding, but it's not going very mainstream. So we had Brett Taylor, or he was on a podcast named Invest Like the Best recently, and he's building out an AI agent company, and where they're starting as customer service. And he had a quote that basically the interface and how you interact with every single company will increasingly be driven by agents that are, they're going to autonomously be able to make decisions. You could actually be talking on the other end to an AI, agent that it's not just trying to query from a select number of questions. It's actually able to make decisions for a company itself.
Yep.
And it reminded me a lot, when we worked on Motley Fool, David Gardner, who's one of the founders of the company, he had this quote that, in the early 2000s, he said, eventually every company will be an internet company. And at the time, the internet was so nascent, but he had seen kind of around the bend, and he had seen that not only will every single company have a website, but how you do your CRM will be based on, the internet. Now with so many remote companies, right, the internet is the basis for how companies collaborate together. So that was a truly prescient and true quote. And I think we might be looking at something similar for agents. You could see how you interact with the company, go to its website. It's just an agent like, what do I need to do today? Right. You could begin interacting with Amazon around how you want to be shopping for anything. Apple Intelligence, you can see how almost all consumer hardware is going to be remade, because you think about something like Siri. Why does Siri stink? Like, everyone hates Siri, right? And it's not just because it can't understand what you're saying. It's also because the missing thing with voice has always been, you need to be the UI and you need to know how to use it. But if you're an agent that knows how to be predictive and helpful for you, as tying into, all the other aspects of your life, all of a sudden that assistant can be truly breakthrough. So I think agents will mean that every single type of you know, consumer hardware and software is going to need to be fully, essentially rewritten and redefined in how it functions, maybe within the next 5 years. And I think the first true examples we're going to start seeing about AI being able to make these autonomous decisions happens in 2025. So I think, right, that's going to be kind of a Chat GPT moment where it's like,
Mhm.
oh, it's not just AI and me going to Chat GPT and saying something. Here's an example of where AI is being able to take actions. It's basically AI for the first time to a wide audience showing reasoning and being able to act autonomously. So I think that's going to be a huge fundamental thing in the next year.
Yeah, because even with a Chat GPT, that was a type of consumer facing application, but people still had to come to it, right? It was, you had to seek it out versus it just naturally being in your everyday life. When I think I know the customer service example is a common one because
Yep.
it's something that almost every company has to deal with. I think it was what Klarna came out last year and made some sort of statements that, hey, we figured out customer service and we're going to be able to automate things. I think it's still TBD on how exactly widespread that is, but
Yeah.
is when you talk about, I'm sure what everyone has an experience with customer service. Let's take, you're calling the airline because your flight is delayed. You get the little automated thing. You try to solve it. They're not answering your question. You're eventually just like, just let me, like, please let me talk to an agent. Please, just like a human agent, like just 0000 operator. And then you talk to someone and they solve your question. What you're saying is, with something like Blackwell, with better models, the logic can get so good that we might actually be able to get our situation resolved without having to hit 0000 and talk to a real agent in the near future.
100%. And I think it's 100-fold jump in capabilities. And it's not just it's because it's able to show reasoning where it's not just a predefined list. It's able to be so much more helpful laterally across all questions, but also that we can get to a point where the AI makes a decision without having to ever get a human involved. If you want to return an item, you could entirely do it. And there's also beyond customer service, like I said, it could just be going to a website or interacting with a brand and being the face of that brand to, meaningfully help you. If you're going to Nike and describing exactly what kind of item you want, it might be that kind of chat box that instead of you ignoring it, you choose to begin your path with that company there because it is genuinely more helpful.
Yeah. And like I said, I think so many of us have had these experiences with, quote, chat bots.
Yep.
And what, 9 times out of 10, it stinks, right? And you're just like, oh my gosh, can I just, because it is following just that predetermined path of, okay, if they say this, then this. So I agree. I think that certainly seems like it does have the opportunity to be that moment, because suddenly, if it becomes very widespread, you'll have people interacting with the AI and kind of be like, oh wow, this truly is different. So certainly one to watch. I think we're all rooting for never having to talk to an agent when your flight is delayed again. So I root for that one. Let's go to the last trend that we're looking at in 2025 on the AI space.
Yeah, and we've talked a little bit about this. Again, these ideas are they're going to flow. We're going to be constantly talking about across everything we cover, but these massive clusters of GPUs, when you're training these frontier models that Larry Ellison was talking about costing $100 billion across the next 4 to 5 years, you're going to need to be able to network increasing number of GPUs. We're talking state of the art going from like 4,000 a couple of years ago to now we have several companies breaking the 100,000 GPUs working in a cluster together. Meta, Facebook recently announced it. Elon Musk company XAI announced 100K one. And as we talked about earlier, Oracle is already talking about a 131,000 cluster for the next generation of chips. So here's what we need to understand, though. When you're building out these data centers, there are massive expenses involved. GPUs are a big expense, but there's the actual land, there's the power that they consume, it has traditionally been more than 50% of the total cost. There's networking, there's newer technologies like liquid cooling to be able to, keep the temperature these data centers are running at. So we're moving to a world where there is hundreds of billions of dollars in annual capex building out these data centers, and we need to get as many GPUs connected as possible. Now, here's the problem. I've read that some of these AI companies, the utilization rate that they have for their GPUs, it's as low as 33%. It's maybe up to 50%, but they're spending so much money on these data centers, so much money on these GPUs, and they're not getting a utilization that you need to get the return on investment. The reason predominantly for this is there's a lot, but it's connectivity bottlenecks of how you're getting all these GPUs working together. So ultimately, if they're spending all that money, it's going to be worth spending whatever it takes to get state-of-the-art networking, state-of-the-art connectivity to be able to get a higher return on your investment. So, David, we talked about Coherent earlier, and I talked about, that I'm going to be looking for a lot of other companies in the space. This is why, because these massive clusters are coming on, the numbers are getting big. We might be talking about a cluster of 1 million GPUs, and there's a bottleneck. We have to improve networking technology, and I think everyone in this space is about to see significant gains starting, especially in the latter half of 2025. And that's where I'm looking. It's hard, right? Because, we're not gonna say that we're experts in things we're not, right? Like going and finding the networking place for this is happening right at this moment. This is developing. So I'm spending as much time as possible, but this is extremely complex. And it's so much work. I'm, reading through transcripts from all these old companies. I'm reading through, I was looking at meeting up with, an industry trade publication in the next couple of weeks in Northern Virginia, because I want to be able to get their take on things. This is an area that previously only a few people cared about, and pretty soon a lot of people are going to care about, which is kind of what GPUs were in years ago. So I think this trend is going to be where a lot of the investment returns come from. And again, you're not going to turn on CNBC and they're going to say, today in interconnects, right? You need to go to something like this show for something this specialized. And it's where we are spending a ton of our research time. But I wanted to kind of get out that idea behind these massive GPU clusters. We need to increase the utilization. This is the bottleneck right now. As much as GPUs, this is the bottleneck, and solving it's going to make some of these companies very rich.
And when you talk about the companies and doing all this work, trying to unearth them and find them, is it a fair assessment to say that a lot of these are existing companies like a Coherent who maybe had other segments, and now suddenly they're needing to kind of pivot their focus as a company and kind of pour more resources, more attention into solving this problem? Is it more of those established existing companies? Are we seeing funding in the startup space for this type of thing? Or is it just so kind of capital intensive that it's like this demand is going to flow to existing companies who can pivot towards this versus two guys in their garage solving this and getting funded, and suddenly it's a $10 billion company in the next 6 months. Is that a fair assessment?
Yeah, I think it's a great question. And let's look at GPUs as a prior example of that. Because NVIDIA was there when it transformed, it took a while to see the next wave of funding of companies who said, actually, we can do this better. You're seeing that now. You're seeing a lot of competition beginning to open up in the startup space. But the shift happened so rapidly, and there was such a need to allocate money to there. It went to the incumbents first. I believe that's what will happen with a lot of these technologies, because there's going to be a lot of money, which is going to introduce new entrants. But there is such an acute need to spend money to fix this bottleneck that I think the incumbents are going to see, truly, if you get the right position companies, fantastic returns across the next year.
Yeah, and you talked last week about companies who want to be on the leading edge, stay ahead of this. There's also this fear of, if we don't do it now, if we wait, for this smaller company to get their resources and set it up, we might have missed the opportunity to do it. So it feels like that company FOMO, that CFO level, CEO level decision of, we have to do this now, we can't afford to wait, seems to also be benefiting those incumbents.
Yeah. And, other companies, they've seen these cycles. So we've gone through so many cycles of mega trends. Like NVIDIA, they've increased how quickly they're doing cards to a level that would have been previously unthinkable. But they realize how much money there is to be made, and they realize it's existential to them as well to not be running ahead. And now AMD is going to basically stop making as advanced cards for the video game market, which is their historical bread and butter, because they're trying to keep up with NVIDIA. So it works both ways, that startups realize how much money there is to be made, but also incumbents are far more nimble than they might have been 20 years ago, because they realize that if they're not staying nimble, they're going to lose the opportunity.
Yep. Okay, so let's actually pivot to a listener question. Speaking of incumbents that have pivoted, again, we do take questions. It's questions@24wallstreet.com. Please send them in, whether questions about individual stocks, news stories you're hearing, things that we're doing terribly that you wish we did better. So please send your questions in. Here's the question we got. It said, in your podcast, you mentioned that Broadcom was NVIDIA's main competitor. I would like to hear more about what makes Broadcom the top competitor over AMD and Intel. There's Intel again. Don't be too mean to them, and others. You seem to indicate they produce more specialized chips, so maybe that sets them apart. So maybe just, I know we're already kind of going long, so maybe just briefly touch on this listener's question on why Broadcom, why not talk about AMD and Intel as the main competitors?
Yeah, and this question came from Kevin. Kevin, thank you. We appreciate it. We're going to split questions up. He actually had 4. They were all very good questions. We'll take them. But anyone out there, if you've got questions about the portfolio, anything, we want to make this a really listener-centric show. So send us an email to that address, questions@247wallstreet. We'll either get to them here, or we'll publish an article and send you an email and let you know that we've addressed it. Like I said, we are trying to be as responsive as possible. So the question of why Broadcom over other options. Well, let's just break down from the top, and what's the high-level thing that we need to understand about kind of the GPU and what other people would call the AI accelerator market. We've got NVIDIA. They're at roughly 85% market share. So that's who's taking, the most of it. They're going to be seeing in this market something like over $150 billion in revenue in 2025. Behind them, Broadcom, they're looking at $12 billion in this fiscal year in AI sales. AMD's looking at $5 billion. Marvell's probably down around $1 billion. And just because I have to do this because you goaded me into it, Intel is dead last at $0.5 billion.
I'm shocked.
That is for you, David. So Broadcom, they're partially there because they already have enough momentum. Of their $12 billion, about 2/3 of that is for their custom accelerators. The rest is for networking. So let's look at what I've talked about networking in this show, but Broadcom is very strong in Ethernet, which is probably the main competition to NVIDIA's networking solutions. Their Ethernet business grew at 4-fold year over year last quarter, which is actually higher than their AI accelerators. The chips that are going into it, their optics grew at 3 times. So these are all huge numbers. Now, the problem, David, in the last episode, you asked, why aren't any of these companies able to grow as fast as NVIDIA? Well, you see with Broadcom, they are kind of growing at the same level. The problem is they have enough legacy business, which is kind of reducing it. A lot of the spend that is going into kind of pre-AI data centers is now falling back. So for Broadcom, their non-AI networking revenue, it was up 17% quarter over quarter, which is very good, but down 41% year over year.
Wow.
It shows NVIDIA, they're able to just move all upside because they're not being held back by legacy business that's reduced, and a lot of other companies are. So Broadcom is the company that best combines a clear position to growth in accelerators and a clear position to growth in networking. And right now, the drive is to be able to offer both of those services, which AMD is trying to catch up in. They just bought, what was the name of it? I'm going to check. ZT Systems for $5 billion. So they're trying to catch up, but they are behind in that aspect of this market. So I just see Broadcom, number one, they're a clear number two. They have a path towards $30 billion in AI revenue, which again, NVIDIA is looking at $150 billion. Everyone's playing catch up, but they're a clear number two. I think that their chips provide the most viable alternative. I think their Windows approach provides the most viable alternative to what NVIDIA is trying to do in kind of an Apple approach of selling the complete systems. And number three, I just see AMD as a little bit more in a catch-up mode, trying to complete this full value proposition. I think there's a chance we add AMD to our portfolio as well. I think they have a good opportunity, especially in inferencing or actually running models, to gain a lot of share. So we're going to keep watching that. I'm not discounting the idea that we have AMD as a portfolio component. I'm not discounting the fact that AMD may well outperform NVIDIA in some of the stages that we see in the future. But I do think the next purchase that we'll see, and we'll just have to look at sizing, Broadcom is going to be in the portfolio. It's just a question of when we add it and at what sizing.
All right, great. You mentioned the portfolio. Again, follow Eric on Twitter. You can also follow the 24/7 Wall Street handle on Twitter. That's where we're going to be sharing the buys when they come out. You'll be able to link to the existing portfolios, see performance. Again, we're really excited to bring that to the listeners. I think that's all for today. Eric, anything else?
No, I think we've covered a lot here, and I think it would be just, again, if you want to follow those portfolios, make sure to go in and take the action. And finally, I know we said it last week, but just please, we're getting started. We're a small podcast. We will do this as long as there's listener interest. But if you have other people that are enjoying, cutting edge investing, they enjoy stock ideas, please, share this, because we do see these very large trends that we described today. I think there's going to be ways to, profit from the companies at the forefront of it that are, have the most growth behind them. But these aren't obvious things. If you know someone who sits all day and watches CNBC, I can guarantee you a lot of these, networking and interconnect opportunities, they're not going to be the lead story. You're only going to get it with a plan of how to actually invest in it on a show like this. So just please, if you know anyone, share. We would love it, because again, this is a new show, and we'll do this as long as, we have great interest. So just please, we would appreciate that.
Yes, please leave us a rating like every other podcast. Eric and I, we only have one mother to go in and leave some 5-star reviews. So we need more reviews out there. Please tell us what you think of the show. We'd really appreciate it. For Eric Bleeker, I'm David Hanson. We'll see you all next time.